Welcome to the Plan Solutions Incorporated podcast, where we give facts and insight on the latest happenings in the world of economics, financial markets, and personal finance. Plan Solutions provides advice on a variety of financial topics, including investment management, tax preparation and planning, and retirement planning. Chase has 25 years of experience in the financial industry, holds a certified financial planner and chartered financial analyst designations, and has earned a master's degree in taxation and a doctorate in business administration. Chase has a passion for helping clients down the path toward their financial goals. And I'm Jason LaChance, and on this episode, we're going to discuss inflation is cooling, but many households still feel the pinch. The true cost of teen driving, new Social Security website, and a look at the Plan Solutions Incorporated office bulletin board. Mr. Armour, how are we, good sir?
Well, having a good day. I know this podcast will come out with a bit of a delay, but Fed lowered interest rates by 0.5% yesterday. The market seems to really like it today. So, we might be seeing that Santa Claus rally taking hold, where you get that, rally from September until Christmas. But we'll see, but a good start so far.
Yes, sir. Yeah, I was reading about that this morning concerning bank stocks. So it's a pretty interesting thing to come across on one of the financial websites I try to read to make sure I'm at least in your wheelhouse of questioning and conversation. So some positive signs for sure.
Yeah, although, the days of getting 4 or 5% on safe money might be slowly going away. So it does have a downside. But positive impact for more risky assets.
Yes, absolutely. Hey, let's dive right into inflation is cooling, but many households still feel the pinch. I'm glad that you put this out because I think it helped me understand more that cycle of adjustment.
Yeah, and partly the reason the Fed was able to lower interest rates yesterday was because we've seen inflation come down, right? We've seen inflation kind of ebb lower for the fourth consecutive month, and finally fell below that 3% mark at 2.9%. So it's been slow trending down as we've gotten closer to the Fed's 2% target, but it does seem to continue to be trending down and is actually the lowest inflation we've seen since March of 2021. So it's been a while since inflation's been down this low.
Yeah, well, let's talk about that. I mean, because the number, we touched on it throughout the course of it, but 2 years ago, we were looking at just over 9% inflation.
Yeah, peaked at 9.1%. So it made a lot of progress in the last 2 years. And of course, a lot of that being the Fed raising interest rates pretty dramatically to slow, the borrowing lending cycle, slow the economy a bit, and try and bring things into check. But as we talked about in the headline, inflation is cooling. The numbers are looking better, but a lot of people aren't necessarily feeling that way for a variety of factors. One we've talked about a lot is shelter inflation. And it fell slightly to 5.1% from 5.2% in the last report. But still, 5% inflation is pretty high, and shelter is a big portion of most household budgets. And then other, necessities like transportation. So it drops to 8.8% from 9.4%. But obviously, still, people are seeing big increases in prices there.
Yeah, absolutely. Well, and I think, I'm glad that you really put that out there as far as, the price of consumption and goods and services, because we didn't all of a sudden end up in a crazy cycle, although this was a more rapid process than usual due to, the COVID situation, lockdown, what was going on with businesses, government aid coming through. There's so many different factors, but it just doesn't adjust overnight either, because there's still those costs of things that were purchased way back when, so to speak, and it's going to take a while till it trickles down. Am I correct?
Yeah, and also perceptions, right? So if inflation's only up 2.9% from last year, and maybe that's more moderate or more normal level, people don't necessarily think that way, right? They don't think back, okay, what was I paying for this a year ago? they might be anchored to what was I paying, 2 years ago, where prices are still up 6% since June of 2022, or, 3 or 4 years ago, where prices may be up 20%, from what they were seeing with a lot of just, the average consumer prices. So, yeah, I think it's where people are anchored, that can have a big impact. The other thing that I think has has an effect is prices for certain things like dental cleanings, haircuts, elder care. I mean, they've increased at nearly double the overall rate of inflation, which has itself been extremely high. So people may not be noticing inflation everywhere, but it's going to stand out when they go to pay for certain things and they realize, oh my gosh, this price is so much higher than what I thought it would be, or what I was used to a few years ago. And so obviously those things are going to have a bigger impact in people's minds when they see those really big price increases.
Yeah, I mean, it's funny you bring that up. I just had a dental cleaning. Luckily, I have insurance, but I did see, oh my gosh, this is billing at like 20% more than what it was. I would just return from a conference in LA, and my car, I have to put Supreme in, and somebody's asking me, about that. I'm like, yeah, I just filled up at nearly $6, and they were like, yeah, I know it's a good amount down here, but it seems to be coming down from where it was. And I'm like, yeah, but where was it 4 years ago? And they're like, oh yeah, it was like 325. I'm like, yeah, that's almost 50%. That's quite a jump.
Yeah, yeah, absolutely. Yeah, those transportation costs, and when you factor in, the increases in insurance as well, which has been another big area, right? It kind of compounds in hits you from a lot of different angles when it comes to transportation costs.
Yeah.
So yeah, there's a number of these areas that really stick out in people's minds, and like we talked about housing. I mean, housing's up 13% over the last 2 years, right? And given that that's one of the biggest portions of people's budgets. I think the average household spends about a third of their income on shelter or on housing. If that's up 13%, chances are their income hasn't increased 13%. So it's probably eating into other categories where they just can't afford to spend as much now, because more and more is going towards rent.
Yeah, absolutely. Well, in addition to that, what about homeowners themselves? I mean, I've noticed property tax increase, homeowners insurance, different policies that come along, facets of my insurance policy. That's all increased too.
Absolutely. And of course, if you did a, remodel like I've been doing, partial remodel this summer, you definitely see those price increases in terms of materials and things. Yeah, I mean, a lot of people are fortunate in housing if they got in early, if they locked in a low mortgage rate, their personal inflation rate has probably been quite a bit less than the overall headline rate because, that money towards housing, at least their house payment is staying stable. And so they're not seeing a big increase there. But you're right. Any repairs or maintenance, insurance, and the typical increases in property taxes, which in some states it's capped as to how much that can go up with inflation, but in other states it's not. And so you're seeing really big increases in the overall property tax costs.
Yeah, and I do recollect that we had talked about it on a past episode. Those are sometimes some of those things that maybe weren't accounted for at first. When it comes to the purchase of a home, okay, we can do this. It's in that 33.33% of our budget, but these things come across and change, and boy, now all of a sudden it's eating up 40% of your budget potentially, maybe more.
Yeah, yeah, and if you haven't seen the increases in wages, then you're just not keeping up, which is tough. Meanwhile, we've seen really strong stock market gains over the last couple of years, and so for a lot of people, that's helped to at least offset that to some degree. But it doesn't necessarily alleviate the day to day, and there's a lot of people that aren't participating in the stock market, so they're not seeing that increase in wealth. So they're really getting squeezed from both sides.
Yeah, absolutely. Is there anything you want to add to this before we wrap up this section?
Well, just that, I think we're seeing a lot of positives here. So going forward, the overall rate of inflation coming down is a good thing. Hopefully we can find a new equilibrium. But yeah, in a lot of cases, people have to look at their individual situation, their budget, their own personal finance strategy, to see how they can now rebuild after this difficult period of rising prices.
Yeah, yes, sir. All right. Hey, a topic that is very personal and hits home for the both of us and many others. True cost of teen driving. Yeah, I've been going through this process of really trying to examine what would it be like if I had to purchase an additional car or provide insurance. So this is really great to share with people because there's so much more to it now than it was when you and I were teenagers.
Yeah, and it's just maybe having an understanding of what those real costs will be and having some discussions about, how it's going to play out in real life, right? I mean, on the bright side, as you may recall, back during the pandemic, we saw used car prices increase 50%. I mean, it's one of the biggest areas of inflation. And on the bright side, those have been coming down quite a bit. So at least, if you want to buy hopefully a reliable, fuel efficient used car for your teen driver, that part is becoming somewhat more affordable. But as you pointed out, the fuel costs not necessarily, right? They've gone up quite a bit, and even as inflation's waned, they've been very slow to come down. And then auto insurance, right? I mean, the cost of insuring a teen driver is pretty shocking. And then you add to that over the last few years, auto insurance rates have increased 43% on average, right? Much less for the average, teen driver where that cost may be higher. So you're seeing a lot of just the base costs have increased quite a bit.
Yeah, absolutely. When I was reading this, I was very much thinking about, I don't recollect maybe what our insurance rates were at 16, but hey, I could go work for, 4 or 5 hours and I could pay for my gas for a week or two. And it's just not the case anymore.
Yeah, yeah, especially if you look at like where minimum wage is at and then the deductions for different taxes and things, it doesn't it doesn't cover a whole lot. It takes quite a few hours to fill up a tank.
Yeah.
Um, And then, you have the other kind of beyond the financial implications that a lot of people don't necessarily anticipate, which is, when teen drivers have more freedom to go to stores, restaurants, movie theaters, friends' homes, right? That can not only increase the mileage, whereas maybe before they were being shuttled back and forth or taking the bus or something like that. Well, now there's a lot more mileage, a lot more cost, but also, the added money that they're spending on dining, shopping, entertainment, and that can really add a big chunk too, which is why I think it's important, to have these discussions, set some clear expectations, have an idea of, what the real cost will be, who will be funding those costs, what's allowed and not allowed to, really set those positive financial habits early.
Yeah, I was going to ask you about that, really as it's a good learning experience to help them understand as I see more young people wanting to be have a gretter understanding of finance, how to spend, earn, save responsibly, invest, and so forth. It's a really good teachable moment to help them understand that hey, you can't have it all. Here we go, and kind of really set them up in a positive way as they enter adulthood.
Yeah, yeah. I mean, it's a good start to budgeting to be thinking about things like insurance, right? That maybe are only due twice a year and setting money aside and being prepared for it, right? Understanding you can't spend all your money on fast food this week because you're going to need gas. And you're going to need to fill up the gas tank next week. Really starting to think longer term, whereas a lot of teenagers, just haven't been in that position until they get to that point where they're driving. They have a little bit more freedom and autonomy, and that's a good time to also build those positive financial habits.
Yes, absolutely. Anything else you want to add here before we jump to the new Social Security website?
Well, I think the interesting thing on this topic is a lot of people are choosing to start driving later, right? And you're seeing that with a lot of teenagers. They're not running down and getting their driver's license as soon as they're eligible. And I think that that can be positive if they're not ready, and obviously it could save on some of these costs. But also, even if they get their license, if they get added to, as an additional driver to a parent's car, they're starting to build some insurance history. So then maybe then once, they're out on their own, hopefully they have a clean driving record for several years, which will then, when it comes time for them to have to foot the bill to pay that insurance, it can bring down that cost. So I think there are some incentives and maybe if teens understood that more, how this could benefit them financially over the long run, they might be a little bit more motivated to get their license, even if they're not doing a lot of driving necessarily.
Yeah, and I'm glad you bring that up because it's really an area that I didn't think about is building that equity is with an insurance company is important and starting to get your name out there, be it bank accounts, maybe it's a young person's, credit card, or maybe even starting, investing under their name and all these things that are really important. I mean, it's a part of adulthood that some of us didn't get a good education on 20, 30, 40 years ago.
Yeah, they're all good lessons, and the sooner you start and build the right habits and have a clean, credit report, clean driving record, all of those things really are assets because they can save money down the line.
Yes, sir. All right. Well, let's talk the new Social Security website. The Social Security Administration is in the process of transitioning old user login and account access to a new website, which is ID.me. Who does this apply for? Is this for everyone? Only folks collecting Social Security?
Well, they're going to automatically transition, people that have signed up recently, but those that signed up more than 3 years ago, they're going to have to go in and recreate, a new account and set it up again. Which is good to do because, one, I think it's useful to have access to your online Social Security benefits, right? Even if you're still working, a lot of times when we're doing retirement planning, that's one of those foundational pieces is okay, where are you at? What's your projected benefit down the road? And, we can kind of figure out, okay, then how much do you need to be saving to supplement that? Or, what retirement age can we target? So it is just a positive thing. And then it's also really useful, in case you need to order a replacement Social Security card. Like I said, look for those benefits. If you're receiving benefits, you can go in and pull down tax forms, which, we've found has been a real challenge in some cases where people haven't received their Social Security tax forms. We're getting close to the deadline, and if you have to go into a Social Security office, it can take months to get that
Right.
information.
Right. What do you recommend? And I'm not trying to be insulting to anyone, but there's some stuff my folks when it comes to, as I heard recently, I have this thing on the interweb. Okay. Really recommendations for them. Is this stuff where a financial planner potentially, can lend them a hand if maybe, website stuff is a little bit complex for them?
Yeah, that's a real challenge in today's society that some people aren't real tech savvy. And unfortunately, everything seems to be moving that direction, including basic government services, which, really is too bad because you have, longer and longer waits for call services and you can't necessarily do everything online. So it does create some real challenges. I found one of the great things is at least if they, somewhat understand like Zoom or one of those types of applications where you can share your screen, that can be a great opportunity for them to, maybe Zoom with someone who is more tech savvy, whether that's their financial planner, a family member, something like that, who can kind of walk them through and say, okay, this is what goes here. This is what you want to do here. And, kind of make them feel a little more comfortable and maybe, reduce some of that anxiety from, being worried that they're going to click on the wrong thing or do something wrong.
Yeah, absolutely. Anything else you'd like to add in addition to this before we talk about the Plan Solutions Incorporated Office Bulletin Board?
No, let's jump into the bulletin board, which is the reminder of the Harlan D. Wood and Debbie Dravenga Memorial Cancer Charity Golf Tournament. So that's coming up pretty soon here, Friday, October 11th. It's going to be at Rancho Marietta Country Club again. It's a 1 p.m. shotgun with the dinner around 5:30. We're sending this out. We're a little light on foursomes. I think our target. I think we need three more to hit that target. So hopefully, if there's anyone out there who's on the fence or wants to come out and play a great round of golf and have a good time, I'd encourage them. Talk to your friends, get together a foursome, or even if you just want to sign up as a single, we could probably pair you up and you get a good chance to meet some new and interesting people. So yeah, this is kind of the getting pretty close to the last call. So anyone who's interested, please, either go to the link that we've emailed out or that's in the newsletter or just give us a call.
Yeah, and I want to ask kind of about the setup of it. You know, the structure. It is a best ball situation.
A scramble. Scramble
Scramble.
is
Thank you.
is the term in golf, which is basically where all four people hit their shot, and then you pick the best one, and then everyone hits from there. So you don't have to be a great golfer, right? If you hit yours off into the woods on the first hole, usually that's not going to hurt you because one out of the four people is going to have one that's in play that is a good one that you can pick and go from there. And so it speeds up the game. It makes it more fun for people that maybe don't play a whole lot.
Yeah, which I bring that up because that's kind of how you and I play. You're always so gracious to me, but but I want to talk about that because if you're like me, I am not an avid golfer, but I thoroughly enjoy going out with you, other friends. It's about having a good time, even if you're playing with a competitive individual that really wants to win. It doesn't. I don't want that to hesitate or hold anyone back from coming out and enjoying.
Yeah, that's a great point. Yeah, I play a lot. You don't play much. Last time we got together, it was you, me, your son, my son, and we just decided to play a scramble and have fun. And yeah, we were, maybe didn't necessarily take a lot of any individual shots, but every now and then you hit a good one, and you say, hey, that feels pretty good, and you're contributing to the team. And of course, golf really when it comes to the score, it all comes down to putting. And for the most part, anybody can do that, right? It's not that tricky. Just line it up and give it a whap. And, maybe you get it close to the hole, maybe you make it in.
Yeah, and at the end of the day, too, the reality is, I mean, these are such wonderful causes. I know that Mr. Wood and Debbie, of course, these are people that matter so much to the Plan Solutions team, and doing this wonderful cause, such a way to give back. So at the end of the day, I mean, that's really what it's about.
Exactly. Yeah, exactly.
Mr. Armour, anything else you'd like to add?
Nope. Just hope everybody had a good summer. Looks like we're starting to get fall weather here, so it's you know, kind of good, kind of bad. I think maybe the 100-degree weather's behind us, but means the colder temperatures will be here soon. And of course, the way I always think it means that means I got to go through another tax season to get back to the good summer weather. But I'm enjoying it while I'm here. And I'm excited tomorrow to watch my number 22 ranked Nebraska Cornhuskers taking on the number 24 Iowa Illini. So hopefully we can keep on this good streak. Of course, by the time this comes out, people can go look up whether I was in a good mood on Friday.
Well, and if people want to know, I think I brought it up. Huge Formula One fan. This has been the most competitive season, and I think it's 27 years. So it's kind of an open field. It's an exciting night race coming up this weekend. So that's kind of my thing. I'm going to be up watching it live at like 5 a.m. on Sunday. So, we gotta enjoy our passions, right?
That's a good thing. At least Nebraska is nice enough to play night games at their time. So it's, early evening, my time, a lot easier than getting up at 5 a.m.
Sounds about right. Well, we thank you all for listening to the podcast. Please hit that like, subscribe button if you're on YouTube and it's your first time. Leave us a comment in the comment sections. There are people that do make suggestions on the topic. So if you're on YouTube, you can leave it in the comment section, or even on Apple Podcasts, Spotify. When you leave us a rating and a review, that review could be a question that you would like Chase and I to address on here. The staff is so incredibly knowledgeable, or you can even email in some of those questions and communicate with the office of what you would like us to touch here on the podcast and the newsletter. So thank you very much for tuning in. And if you want to get subscribed to the Personal Financial Review and you haven't already, send Katie an email, please. That's KATIE @plansolutions.com.
The views and opinions expressed in this podcast should not be construed as an offer to buy or sell any securities. The information may not be current, and Plan Solutions has no obligation to provide an updates or changes. Plan Solutions does not make any representation or warranty as to the accuracy or completeness of the statements or any information contained in this podcast or any liability therefore, including in respect of direct, indirect, or consequential loss or damage, is expressly disclaimed. Plan Solutions is not providing any financial, economic, legal, accounting, or tax advice in this podcast. In addition, the receipt of this podcast by any listener is not to be taken as constituting the giving of investment advice by any Plan Solutions associate or individual to that listener, nor to constitute such person a client of Plan Solutions. Any reference to a specific company or security does not constitute a recommendation to buy, sell, hold, or directly invest in the company or its securities. Market indexes are unmanaged and cannot be invested in directly. All price references and market forecasts correspond to the date of this podcast.
Plan Solutions is a registered investment advisory firm.